Ladies and gentlemen, K-Kim here with the Traders Club. Welcome to the market update. Hope you guys had a good week trading this week. We're having a good week this week for the bulls, and let's talk about that. Let's kind of follow with what we've been talking about last couple of weeks on these market update videos. As usual, let's start with Spider, Diamond, Qs, Russell, Semi, and the banks. Let's actually talk about some of the things we've been talking about this week. This was, when was it? This is third. This is on Monday, right? This was on Monday. There you can see, June 3rd, 2019, Monday. And this was when the market was right here, right there. And we talked about that, and you can follow me on Twitter. I'm only on Twitter. I'm not on StockTwits, any other places, but I'm on Twitter and YouTube. But at 2K, you can follow. Market usually bounces early or late. It will never bounce in a level where everyone expects. Once majority of traders, investors wants to throw in the towel, that's when the market will reverse. We're getting very close. So basically what I'm talking is what I mean by market usually bounces early or late. What I mean by that is this. Here, let me give you a good example here. If you look at this here, when we get to 280, do you guys remember the tension that we had? Do you guys remember the CNBC chart master guys, right? They're calling it, 260 or retest maybe the lows, right? Market bounced what? Early. Because why? Everybody was expecting. Here, let's go to clean sheet. Let's go to clean sheet and talk about it. And then we go come back to my chart here. So right there. So that was 280, right? So obviously 280 was that prominent and what I call obvious level, obvious resistance that everybody can see, right? Nowadays, everyone got these little charting softwares that they have, or free charting software, or free charting, internet viewer things. And if you have online brokers, they'll give you one. So everybody can look at these levels, right? So then we got to 280. We start pulling back. And these CNBC chart master guys are saying that this thing is going to come at least to this level because, this is a level where we found in late 2018. So we're going to come down to 260. That is an ideal level, most likely scenario, these guys say, right? And then what happened? And then they're also saying that we could possibly bounce a little bit, and then we come down to 240. That's kind of what I mean when I say market uses its bounces early. Right? Decided it's not going to be... See, everybody was looking at, I think, 260. Maybe potentially even to buy that dip. Because, after about 20% move... What was that? Is that 20% move? Yes, exactly 20% move, right? So after about 20% move, you're not looking for just measly 1 or 2, 3% correct. You're looking for at least pretty good amount. Maybe, 5, 6% or something like that. Yeah, like 5, 6, 7%, right? That's what everybody's looking for. If you missed out this entire run, are you going to buy this dip at here, 275? No. Market usually bounces what? Early or late. So this time, what did it do? It bounced early, and then it went to all-time high. And then people like, okay, and then what did it do? It came down to about 280, right there, right? And I think that's what everybody kind of was expecting, around 280. And let's just do this, actually. Let's do that. I think that was more dramatic here. That was a 280, right? So you can see how that level, the dip was, again, that's, another one of those obvious level that everybody's expecting. Everybody's looking at the same level. So you can see these long lower wicks, right? Dips are getting bought, and they're like, okay, hey, that's a hammer candle, okay, that's going to get us to 300. And market sometimes bounces early or late, but it will never bounce in a level where everyone expects. So if we go back, 280 is what everybody was expecting. That's that level. Look at, you can draw this line perfectly. Prior resistance, man. And then here, and then support. We gapped up, we came down again, and even filled that gap. So that's a pretty good support level. There are dip bars coming in. That's a pretty ideal level. And at this point, I think we had a what? About About 4% correction. 4%, not too bad. Better than, 3% here. And then market just gaps down. Just gaps down out of nowhere. So then this gap down, is a pretty big gap down. And so again, market is not bouncing in a level where it expects, and then this thing gets back up again a little bit, because that's still kind of at that level, 279, 280. People think that, okay, that's a little bit of flop, that's a little bit of a bull trap, man, that's a little bit of a shenanigan, it should go right back up. Because that's the level, that's a 280, right? Goes back up, fill the gap. What do we talk about? When the gap gets filled, it acts as instant resistance. If you've been following me long enough, you know this, because I've been talking about it. And again, we're going to talk about that again today, because there's something happened today, that preceded that gap theory, right? Anyway, so 280, we got back up here, and then that's another pretty ideal level. And then market comes back down and starts to be very gappy, and it actually breaks below the 280. And at this point, what is the bear saying? Aha, left shoulder, right? Again, nowadays, everybody got these little charting softwares, man. And everybody got these little cheat sheets, like, oh yeah, man, I heard about this. This guy was tweeting it out. That's a head and shoulder formation. That's a neckline broken. Not understanding long-term implication or nothing. Just looking at this. Yeah, this thing is going to go down to 240s. 240s. That's what these guys are saying, right? And then they're like, okay, that's a neckline here. So that's going to go back up and retest that. It's going to come down, and we're going to have that head and shoulder formation playing out. Market uses bounces early or late. It will never bounce in a level where everyone expects. We're getting very, very close. And once this happened, again, once the majority of traders, investors want to throw in the towel, when this happened, now they're aggravated. Now their patience breaking. Now you're like, okay, well, this does look like, this thing's going to 240s again. So the longs, a lot of bears probably flip bullish here, right? Probably a lot of bears flip bullish. A lot of bulls, a lot of cash people, they're scared, they close out their position, they start chasing it up here, start coming down, maybe start buying even more and more and more. It's coming down, continue gapping down every single day. It is painful to watch. We get to about 274. It gets another gap down. That was their drawdown, right? And this might have been, they looked at that, okay, so you know what? I'm going to place my stop just below this level, maybe 275 or so. Takes everybody's stop. Everybody's gotten out, right? And the investors and traders throw in the towel. They're like, you know what? I can't deal with this anymore. I cannot live with myself anymore. My life is miserable, right? Boom. Right? And that's on the neckline. And that became kind of a trap there. For both bulls and bears, really. Not just for bears. For both bulls and bears. It was trapped for both. Because it made the longs close out their positions with loss, and it made shorts add on to their shorts. They probably kept adding throughout this week, and now they're probably forced to cover. Thus, we're seeing another gap up today. But what I really want to talk about, though, is the strength of this run, focusing on here. Do you know that this is an island reversal? You know what? Let's actually go to clean sheet again. Do you know that, I'm going to put a box here. That's an island top. We talked about this on the last week. This is why I put this. I didn't change anything on my chart since last week's video. I made that box purple. And why did I do that? Here, I'm going to try to move this here. Okay. Why did I do that? Because to signify that this is not just ordinary gap, but that's an island top. When I make green box, it's island bottom. When I make purple box like this, that means that's island top, right? We gapped up initially, and then we gapped down. 2 days sideways gap down, made it into an island. That gap island top made this come all the way down to about 273, right? So what we've been learning that once the gap gets filled, most likely, usually, it acts as resistance. And that's kind of what we've been seeing throughout this year. You know, the gap gets filled, it acts as resistance. You can see right here, there's a huge gap. Got filled, it acts as resistance, right? A lot of times, you know, same thing happens opposite direction. Do you know that this gap was filled? And that's kind of why we found support. And that was island reversal as well. See that? That was gap down, that was gap up, this was island bottom. So this island, and I had that, you see right there, in my chart, you see that green box. We filled that gap, and it acted as what? Support. So why is that? This island top box, we filled it, and we're not seeing a pullback, but rather we see another gap up and a follow through today. That's how much strong this move. Do you know that that's very rare occurrence usually? Because usually especially island gaps, they're pretty strong. Last time we saw something happening was down here. Let's go to clean sheet again. I mean, it was an island, but it was pretty significant gap. Why? Because, I mean, this was already down 20-some% since the peak, all-time high peak. We started moving up here, and then this thing gaps down out of nowhere, and we see a flush. This was like, what, 3% down day? Something like 3% down day, like 2.7, 3% down day. And then it gaps up next day. What a shenanigan, right? And then we fill this gap. We thrust above it. You know, not only filled it and start retracting, seeing resistance, we thrust above it and we kept going higher. We never looked back. But many times when the gap gets filled, what does it do? It does resistance. At least it pulls right here. There's this gap, right? That gap got filled. What did it do? We pull back. We pull back. And then there's another gap down. What did it do? We gap down again. So we, because of this gap, it hang around here for about a week or two. So we look back at this. There was an island top gap. And we initially pulled back a little bit towards the end of the day yesterday. But we gapped up. I don't know the last time we've seen that sequence where we fill the island top gap and then it like gaps up next day. Usually you will see it hang around a little bit and then continue higher maybe, or pull back a little bit and continue higher. I mean, it would have made sense to maybe pull back, kind of catch up with some of these, you know, short-term moving average and then go, but we just gapped right back up. Do you know what that does? That actually made this into kind of, it's not like textbook island. Why? Because we got gap down, we got a gap. Okay. I'm spending a lot of time here just doing more detailed analysis on the S&P. Gap down or gap up, gap down. I mean, it's just the vicinity. It's not like a textbook, but the idea is there, and then we gapped up. So, in a sense, this entirety potentially is an island. So I made that green there. But island bottom actually started in some of these indices, right? This was 4th of June, which is Tuesday, correct? Yes, Tuesday in the morning time there. Island gap. You saw that my chart. That was Tuesday. And again, the same day, talked about XLF and the Russell 2000. And those guys made this move here. So let's do a little bit of maintenance here. That gap was filled. But good news is this gap, island gap, was never filled. So 272. So those are the levels I gave you last time, right? So we held those levels. And then there's a gap here now, right? What I want to do though I want to actually annotate this gap because I think this is important gap. This 284 and 286. Just in case some shenanigan, I want to put that 277.42. Just in case some shenanigan, but I think there's a lot of moving averages going to catch it. If we do fall back, I will put that 277. If the market wants to come down and challenge that area, if anything, we may see inverted head and shoulder type of move. Because a lot of times when there is certain type of head and shoulder formation like this, market is going to come down to retest the right shoulder area, equal highs, and pulls back, and then reverses with the inverted head and shoulder formation. It's almost like a counter attack. We got head and shoulder, and then we get different head and shoulder. That's also a possibility. Or we hang around a little bit, pull back next day, next week on Monday, Tuesday, retest 286 to 284, maybe even fill it. I'm not sure about that, but on that area, 286, 284, and we get back up to fill this gap. And 294, because once the gap gets filled, probably gonna pull back again. But this is a very good cultivation, and a lot of strength, a lot of momentum has been built just this week, right? And pretty much 1 week move eradicated last 2 weeks of down move. So it's very, very tough look for the shorts. Very, very good look for the longs. Right? So I think the next task is how the market is going to deal with this gap area, 286, 284, and this gap down area right here, 293, 289-ish. Let's go through these diamonds and stuff quickly here. I'm just going to do a little bit of maintenance. I gave you 248, 245 last week. We held it. Market held that level. I haven't changed anything since last week's update, right? We held that level. That was island bottom reversal. Never filled that. But with that, we actually had, here, let me do this. So there was, you know what I'm going to do? Because that's actually an island. We got a gap down, gap up. So I'm just going to move this like this, right? And move that to 50. And then we got this here. Let's move that. And then we got this gap right here, right? That's from just today, this morning. Move to 258, 257. Here, let's actually get rid of that so it's not too messy. Actually, you know, on the diamond, we actually came down to this level. Look at that. I call this as a trap. Just massive, massive trap, right? It just freaked the hell out of everybody, right? Longs got scared, gone out. Shorts got excited, started buying more. Probably thought this was going to be the major crash, start of a major crash. Probably adding shorts all throughout this move, and that was this. But market decided on the diamond, came down to that level. Look at that. Support, 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 support. So that kind of a rising channel type of move there with this flop, right? So made a new low, right? That's what market likes. Again, market sometimes either bounces early, right? Or late, but never a level that everybody's expecting. Because the market loves to come down, take your stops. A lot of people had their stops run here, took it, now it's going without them. Let's go to Qs. Nice. So last week I gave you these levels, 269, 268, never filled that gap. And what happened was we actually opened another gap right here. So you know what I'm going to do? Let's do that. Let's increase this like this because we opened up another gap. And then we move that, right, to 260, 272, right, to signify there was a gap here, there's a here, right? And then take that out, right, and then move this. And I'm purposely doing this with you guys. You know, I used to always do all this maintenance before the video, but I've decided to do it this way. Purposely doing this way so, you know, if you guys are kind of just picking up some of the technical analysis aspect, and I'm trying to teach you just how to understand levels and the gap areas and things like that. And you guys know that, you know, I track gaps here in my analysis, especially when I'm doing look at it's kind of a shorter term. And I'm just want to teach you how to look at some of these levels. Let's get rid of this line. Just again, let's not make our chart messy. Kind of a more of a cleaner look to have to understand certain levels. Right? We've got the 178, 177. Worst case scenario, maybe retest that or challenge that. But just with this gap, it's very, very strong, and just the way the market has been moving, just looks like we may not get to 172. It's gonna have to challenge this 170 at 177 first. But on the Qs, we got this little gap there and the bigger gap. I think that's kind of what it's gonna go for next week. We're gonna probably have a short-term pullback though. After this, you know, again, after this, like a whole week of just vertical move, I won't be surprised to see maybe a short-term pullback or something like that before going higher again. Russell was a little bit laggy, but what did we talk about on the last week video? Let's look at that as a trap, right? We talked about that this being a trap. We talked about this is a pretty good level to accumulate. We talked about in the last week video. And then we got the gap up a little bit, and we're just kind of stuck. We got this gap here, and it's kind of stuck below it. You know what? It's gonna make things really, really good for the bulls if the Russell gaps up sometime next week, somewhere above it, and turned it into entire thing as island bottom. I think we'll get here quickly. Then we'll get to about 160, 161 quickly afterwards. Look at that. This is where everybody's stops were, right here. This is what everybody was placing their stop. When this thing started coming down, everybody's running for that exit, right? Shorts are excited. They start adding shorts. Longs close out their longs before this thing goes higher. And that's how the market is going to make sure you're not in it. When the next move happens, it's going to make sure majority of traders and investors are not in it. That retail traders are not in it. Let's go to semis. Semis held it. We also talked about semis. We had a pretty good decline or pretty sizable correction here. We talked about 99, 96. This is pretty much the bottom. We talked about that. And you can see I gave you those two levels, 99, 96. We held that level. We're bouncing here a little bit. And this is a good size pullback, right? This is a good size pullback. And we needed that cultivate. We needed a higher low. There's no uptrend without higher low. Intermediate term higher low. Remember we talked about it? Market bounces early, which that's what it did here. Another early bounce. And then market has conditioned traders, short-term noob traders, thinking that that's what it's going to do. So what does it do? When we get a little bit of pullback, people start adding. And finally, when we see a big gap down like this, they can't live with themselves anymore. They start closing them out, and then it usually reverses. So either it bounces early or late. That's what the market does, right? Either it bounces early or it bounces late, right? Usually bounces early or late. Never bouncing where everyone expects. So understanding, like, you know what I mean? Are we at a level that we're gonna have a late bounce, or are we at a level that we're gonna have an early bounce? That's gonna really help you in your trading. So then you understand what level to buy and things like that and what to expect. One last one, XLF. I'll let you guys go with this. We talked about this. Market sometimes not going to perfectly respect this neckline, right? This is that neckline. Again, the obvious level, obvious level, right? This is pretty much the perfect line. It's not going to, bounce either early or late. Attempt to bounce, came down. Everybody's potentially looking at this as a neckline of this invert head and shoulder formation, right? Maybe had played their stops below it. Market came down, taken out their stop, gone right back. Last week, I gave you this level, 25.90, 25.60. We held that level. Let's do this. Let's move that. That's actually island. You know what? Let's do it. This is an actual island. Let's make that into green. Right? And then let's move this up like that. Annotating that that's important level. That 26.51, 26.17 is important level. Look at that. We fill this gap and continues kind of hovering around. And we see much stronger move on the S&P. Like we gapped up and continued. But XLF, it is doing what it's doing. We filled it. We're hanging around in that vicinity. We're seeing a little bit of resistance in that area. And also we got that short-term kind of resistance there as well. So we're kind of hovering around that area. But this is a very good cultivation. If you look at this more about minor to intermediate, we got higher highs and higher lows. But however, more the primary to intermediate, we still do have these lower highs. And so it's going to, a lot of times when you see, these lower highs, so banks are going to, look at today. We have a very, very bullish day on the market, on these large indices, but banks is negative. It's because of this. It's because of that. Usually what happens is one of these days, you're going to see banks just flying, just trumping everything else, and usually that's how the banks is going to catch up with the large indices. One of these days you're gonna see, you know, banks maybe even doing some shenanigan move like that, or like just big move, you know what I mean, to kind of you know, catch up with the indices. And so it's because of these lower highs, you can see when other indices are positive today and doing really well, banks are not, because they are buying these stocks that are moving, these large cap stocks that are moving, and then these banks being kind of lagging, so they're kind of actually not buying it at this point. But some point when these large indices kind of gets kind of extended, the money starts to rotate back to more these lagging sectors. So don't like disregard and don't start chasing these large stocks, large indices. I'll look at these lagging ones, see if you can, you know what I mean, start seeing some opportunities in some of these bank sectors and things like that. That's kind of how I would approach it going into next week. So, well, that's everything for me. You guys have a wonderful weekend. Good luck trading next week.